Welcome to the Texas Conference Annual Treasury Training. Section 3, Control Procedures. Control procedures are all the policies and regulations over the church's transaction and assets. Generally, control procedures are categorized as transaction authorization, segregation of duties, adequate documentation, and access to assets and records. All transactions should be authorized by a responsible person or body. Without a formal system of transaction authorization, any person could commit resources without regards to the church's objectives. For example, Sabbath schools should only authorize their activities and expenses. Segregation of duties. Optimum segregation of duties exists when collusion, a fraud penetrated by two or more persons, is necessary to circumvent controls. To achieve optimum segregation of responsibilities, an entity's management, custodian, accounting, and monitoring functions should be performed by different individuals. For example, the treasurer writes checks, reports, and approves the bank reconciliation. The assistant treasurer does the data entry, validate the offering, and do the bank reconciliation. And the deacons validate the offering. Documents and records are evidence of executed transactions and collectively represents the audit trail that is so critical to an auditor or the treasurer when tracing transactions through an accounting system. Access to assets and records. Only authorized personnel should have access to assets and records. It is very important for the church treasurer to submit the church records to the conference auditor for the annual audit on time. Avoiding the annual audit can be perceived as the existence of serious problems or irregularities. Fraud is a non-authorized use of the financial resources of the church. Fraud is committed to 1. Benefit the individual who has committed it, and 2. Benefit another individual or entity without the consent or authorization of the church board. Key concept. Fraud can be very difficult to detect. Case scenario 2. The One Land SDA Church, located in a major metropolitan city, was growing in an area being reported to be one of the top 10 cities in North America. The local church had all internal controls and procedures, which included the delegation of duties, board meetings, and frequently reporting to business meetings. The church experienced revival and planting of new groups. In addition, the church operated on a surplus by the end of the year. With membership and attendance increasing, the church found itself outgrowing their current building, which brought upon a new building project to expand their sanctuary in order to accommodate their growth needs. During this time, the church auditors were not able to obtain records and verified amounts. When the church books were provided and an audit was conducted, the findings indicated that the church was short by $150,000. An investigation resulted in discovering that the church treasurer was withdrawing money from the church's bank account. Now give it some thought. Why do you think this church would need internal control?